Welcome to the last live stream for my channel of 2024. It coincides with the last trading day on Wall Street of 2024. It has been an excellent year for stocks. Stocks have gone up real well for 2024, and it follows a really good year in 2023. I was hearing earlier that we had the best 2-year run since 1991 or so. It's been a long time since we've had such a good run, so it was good to see that uh, happen. As we as we look at 2025, what to expect. The way that the markets ended the year, I think, is giving us a preview of what's going to happen next year. We've got for the last call it last part of the month, the Nasdaq was down a little over 4%, which is a nice quality pullback. No big deal. But that might tell us that in January, there's investors that are looking to sell some of the stocks, specifically in technology, that are sitting on very, very good gains. And that type of selling could really drive a good correction. We're down 4%. That's just a little pullback. But if we get below 10% overall, you can call it a correction. And if we get below 25, we can call it a crash. So we'll see where the NASDAQ goes. But my expectation is that January is going to be lower. We're going to go lower on stock prices if you go from January 2nd until January 31st. And I expect we're going to be lower than when we started. And I think the momentum that we've seen this week with stocks trading lower, selling off, really gives me that expectation. I already expected that in January we would see stocks give up some of these gains. And it's just, my senses tell me that, hey, it has been a great 2 years. Let's take a victory lap and enjoy it. Up 84.5% the NASDAQ has. That's great. But, to expect, hey, let's just put another 40% gain on this. That's just, wishing a little too much. And I think we'll have a more modest 2025. And it'll be important to be in the right sectors that maybe haven't gone up as high as some sectors and some industries. For example, semiconductors are really high. And I can probably look at a couple of semiconductors today and see what they're looking like. Today I see that Joshua joined. Thanks for joining. You want to talk about Devon Energy? Would be happy to talk about Devon Energy. Energy companies did do well today. And energy companies, when President Trump first won, they really rallied, but they gave up those gains and have kind of been on a slump. So we'll take a look at it, Devon Energy, in a few minutes. Just looking at where the market has been for the last month and kind of what it's telling me as we near the beginning of 2025 is I think again we're on an expensive market, and I expect that market is going to give up some gains. We had from the high in December, the S&P is down 3.33%. A good pullback. No big giant correction just yet, but we'll see if this continues. It might continue. There might be, just enough uncertainty and a lot of investors wanting to cash in some of those positions they have where they own a particular stock that maybe they're sitting on 2, 3, 4, 500% gain. They're like, you know what? I'm going to sell half of that. I'm going to sell 10% of it. I'm going to sell some percentage of it because I'd hate for that thing to drop. Then I'm sitting on half the value that I began with at the beginning of 2025. And I regret that I didn't cash in on some of those shares. We'll see. We'll see. And, at the beginning, just to see how, the one thing I would say is this past year was really smooth. Like we didn't have any big drastic pullback. And the worst that we saw this past year was when from July 16th through August 5th, we saw a pullback of 8.49%. And that was probably the roughest period we had of the year. And again, 2023 was a really good year. So we had really good gains. Before that, I think the other period that was a little concerning was from March 28th through April 19th. It was down 5.46. So my point being that the year has been rather calm. The volatility isn't there. If we go back, this is going to kind of get rid of, as you look at a larger timeline, we don't see the volatility, but you could see that this year was pretty rough, and you could see all that volatility that occurred from the top to the bottom. The S&P was down more than that. It was down about 25.5% in 2022. So it'll be an interesting year. A couple of things, just to mention it while I'm there. Bitcoin had a incredible year, up 121%. If you look at the 5-year, it's up nearly 1,200%. So it's been a really incredible time for cryptocurrencies. And with the new president, I think it's likely going to go up higher. But crypto did give up some of their gains in December, similar to stocks. It gave up 12.16%. And in the crypto realm, right, more volatility. So it jumps up and comes down at greater degrees. So 12.16% is down, but hey, I'll take it. It's been a great year. I own Bitcoin, Ethereum, Coinbase, and to see this type of appreciation has been great. It's been great to be a Bitcoin hodler for the last 6 going on 7 years. It's been a great rate of return. I'll take it. And I've been buying Bitcoin. I consider that as Bitcoin trades down under $100,000, I'm a buyer. I'm probably going to buy more today since Bitcoin trades 24 hours a day. I'll probably buy more late today or tomorrow. I'll probably do it before the open on January 2nd. All right, so that is Bitcoin. It had a great year. The NASDAQ had a great year. The Dow didn't have a great year, and I wanted to point something out. So this is pretty much less than half the rate of the return on the S&P and the NASDAQ. And you could see the much, rougher ride for the past year. I showed you the S&P. It was pretty smooth. And I would say that especially look at over the last couple weeks, this is pulled back like 5.49%. So the Dow is made up of companies that are a little more older school, a little bit like Devon Energy, but Devon Energy is not that big, so they're not included in the Dow. It's 30 of the biggest companies we know of. Like Chevron is in the Dow, which is an energy company. And those stocks tend to be dividend payers. They tend to be kind of value stocks. The value stocks really fell behind. They fell behind growth stocks. And I would caution, if you're a value investor, I understand you're trying to invest, more conservatively. Totally get it. But the thing that I want to caution is oftentimes investors are enamored with dividends, and dividends are easy to understand. Hey, there's a dividend. One company pays 2%, another company pays 5%. It seems that the company that pays 5% is better. Well, not quite. As you can see, this is a rate of return of 28%. So if you were really hung up on dividends, I think you're leaving a lot of money on the table, because if you go to growth, whether it be technology or you go to biotech or whatever type of growth is really something you understand, your rate of return was 84%. So 28 versus 84. Very easy math. So value dividend paying stocks really have not kept up for the last 2 years. So I would just say totally respect older investors, more conservative investors like dividend stocks. I'm not talking you out of them. I'm just pointing out the fact that growth stocks have been performing lights out and have been leaving value stocks way behind, which is just a thing to keep your eye on. How you doing, Mike? Good to see you. And put your comment up there. For most part, my dividend stocks have been clobbered this year. I rated 3 out of 10. Yeah. And that's my point. I've observed it. I've got dividend stocks, but as Warren Buffett would say, he believes that dividends are tax inefficient because you get taxed on dividends as ordinary income, and dividends are overall good, but I would rather see like Coinbase. I probably tripled my money on Coinbase, and I could just sell shares if I needed them. If I need the money, I'll just sell shares. Or Meta, right? I could sell shares of Meta if I wanted to. Those are not dividend paying stocks, but they've appreciated so much that I'd rather have the appreciation. And then I get to control the taxable event. And in both cases, it'd be a long-term capital gain, which is taxed at a lower rate than ordinary income, which is taxed just like your ordinary income. And any incremental dollar is taxed at whatever level you've reached in overall income. So wanted to point that out, but I'm not going to beat that to death. I just wanted to share it, as Mike alluded or really clearly expressed, as he's also seen it. So now I would point this out, that in 25, we may see a comeback of dividend stocks. We may see that the growth stocks have been doing great for 2 years, and maybe they sell off. And if you're in growth, maybe you see a negative year in 2025, or maybe you see a year where you have close to zero returns, and then value stocks really shine. We'll see. That could happen because certainly value stocks have not kept up. So maybe there's some upside there, and investors maybe move from high growth, stocks like an NVIDIA or a Broadcom. And they say, hey, I'd rather own a nice stable stock like a 3M, a Chevron, an Exxon, maybe a Walmart. I mean, these are, and don't take this the wrong way, nice, boring stocks. Walmart, they're going to be around forever. We all know what they do. Chevron, they're going to be around forever. We know what they do. I fueled up at Chevron today, gave them, and I actually downloaded the app and pay on the app, which is cool. And they give me like 5 cents per gallon off. And then there's this reward system that basically I'm getting rewarded upwards of 15 cents a gallon, 20 cents a gallon. I'm in California, so we get to pay the most amount per gallon in the country. So I thought it would be cool to try the app, and I'm glad I did so. I should have done it a while ago. I think I could have saved at least a couple $100 throughout the year, but I'm ready for 25. I'll be saving a few bucks on fuel. All right. So Mike, I personally rather have both dividend stocks and growth stocks. Good plan. Good plan. Be diversified. Boring, the money, it spends the same. I have a nice boring stock in CTRE. It's a real estate investment trust. They own properties that basically get used for the elderly to live at. These are folks that need health care while they live there. It makes a lot of money for me. And you know what? It spends the same. Those dollars that I make spend just as well as my super cool Meta stock or super cool Robinhood stock. The money spends the same. So don't take boring the wrong way. I like boring because boring means like dependable. I don't have to worry too much about it. I started positions this week in a couple of neat little companies For example, one of them is Upwork. And this Upwork company is doing something new for the gig economy. I really like their business, and they resemble like an Uber or like an Airbnb, where they're making money from connecting people that need, you know, resources, human resources to work on projects, maybe do gigs and so forth. But it could either go up really well, might go sideways, it could go down substantially. They can find themselves, because it's a brand new space. What if they get into legal trouble where states begin to say, hey, the way you're doing things, you got to start classifying everybody as employees. If you recall, Uber was having some challenges around that. There's more risk. So boring means I know what Walmart does. They're going to keep doing it. No big deal. I know what Kroger does. And you know what? I don't think I'm going to catch any negative surprise in 2025 for Kroger. If there's any news, the news will probably be, kind of small, trivial, and that's what I'm expecting. So, as you look at your portfolio for 2025, realize that, it's a good idea to, balance things out in your basket of wealth. Put some things out there that, there's a part of my portfolio that's in bonds and some value stocks. That money is kind of solid. It's not going anywhere. Then I go with growth stocks and crypto. Crypto's the smallest, and I'm expecting that to grow. But I also see that, like in 2022, they really pulled back hard, and we all took it. We all took a pretty good haircut in 2022. Let me just remind you that in 2022, the growth stocks were down more than 30%. And that was pretty ugly on stocks like Meta, Robinhood. It was just sold off like you wouldn't believe. Coinbase was sold off like it just was completely undesirable. So when things sell off, those technology growth stocks really sell off fast. So we will see. We will see. It's fun to kind of, reminisce on the year and kind of try to figure out, how do I want to play the month of January and set the table for 2025. It's been an excellent year, 2024, 2023, even 2022. I consider it a very good year because I learned a lot. And frankly, I did okay. I had enough value in bonds. I also had some real estate transactions that made that year a very positive year. In 2022, what kind of saved the year for me is I had a huge gain on one real estate asset, and that more than covered all my losses on my stocks. So I'm not going to do a real estate deal like that every year, but that happened to occur in 2022 early, and it gave me a bunch of capital that I was able to put into the market when stock prices were down. So that was good stuff. All right. So before I move on, let me just mention, I want to wish everybody a happy new year. I want to wish you a couple of things. First, good health. 2, fun experiences. 3, great returns on your investments. So that's what I wish everybody. And I really appreciate you guys tuning into my live streams, watching my videos, being a part of the community. And it's been a really, really good year. And I look forward to continuing it in 2025. All right. So Josh wanted to talk about Devon Energy. Let me catch up on some comments, and then we'll get into Devon Energy. And Joshua, agree, Meta has been my best purchase in the past few years. Yeah, growth could be valued a little expensively, and in some cases a lot. So your spidey senses, I think, are aligning with my spidey senses. It's not going to go up forever, but I'm not selling any of my Meta stock, by the way. It can go down, I'd buy more. Cool. I'm glad you have CTRE. CTRE has just been good stock. And it's a wonderful, boring stock. I can't tell you one story that's occurred at CTRE over the last 2 years. Not one. Not one that's controversial, not one that's a negative surprise. I could just tell you CTRE has made me money. It's almost like, you have this stock that is low maintenance, just sits there and makes money for you. And it's like beautiful. Up 62.5% in, let's call it 2 years and a quarter. It pays a handsome dividend. It was paying, I'm going to say 3 to 5%, depending on the time when we're looking at it. So you're getting paid a nice dividend. Stock's up 62%. Wonderful. Awesome. What are your thoughts on China stocks? Just trading sideways, both. I bought at $95 4 years ago. So I think China stocks are unappreciated, underpriced. They have much more value than their prices would show. But the reality is that it's just not what generally stock investors are looking to buy into Chinese stocks. So I'm going to hold my Alibaba. Actually bought some more Alibaba over the last couple months, and I bought into an ETF for China stocks, and I'm really watching China stocks. I think China has a bright future. They're growing much faster than the US. Some things they do really well. I think the EV market is just going to get so much intense competition from China. They're putting out really good products there. On the technology front, as you guys likely heard, TikTok, which is a ByteDance property, the president-elect is asking the Supreme Court to pump the brakes on making TikTok illegal in the States. And that's, again, back to Asia, back to China. They're doing some things that are quite interesting. But the reality is that the Chinese stocks are not going to rally until they rally, until investors say, in general, they're very desirable. For now, I'm just going to be careful, put some money there. So on cash, I built up some cash in late November, early December, thinking I got to have some cash. I have a feeling that we're priced too high, and I'm thinking I'm like 8% in cash right now. So I'm not like 50% in cash. Warren Buffett's got a huge cash amount. I did some selling, tax harvesting. You have cash around 15%. Cool. And I would also say, as part of my cash position, I have some bonds that are going to be maturing, and that's part of my cash circulation. So I'm probably going to have about another 5% of cash in 2025 redeeming, and a good amount of it is going to be in the first 2 months. So the first 2 months, I'm going to get more cash. So I'll probably be closer to 10% if I don't buy anything, but I've been buying stuff. This pullback, I like to dollar cost average, and I'm glad that I've got cash to do so. Yeah, Happy New Year, Mike. It's been a pleasure to interact with you, and look forward to 2025. Happy New Year, Shadow Guy. OHI for you. Awesome. I hope that does well for you. And hopefully you made it back in one piece, back to your home after traveling to the U.S. It was great to meet you. I guess it's about a little over a week ago. All right, so let's get into Devon Energy. Devon Energy is, let me reacquaint myself with Devon Energy. I forget if so these guys are an independent energy company engaging in the exploration, development, production of oil, natural gas liquids in the U.S. So they go out and find it, find the oil, and then extract it, and then get it somewhere where it could be transported or put into a pipeline. And then somebody else is going to refine it. And then somebody else is going to retail it. And they call that downstream. Midstream would be the refinement of the product. These guys are upstream. These guys, every time I look at energy companies, it's a little bit like the story on China. It's going to show a lot of value. It's just investors have not been buying. Over the past 5 years, you see that for a while, this thing looked like a genius investment. Look at that upside. Beautiful. But then since, guess, the middle of 2022, not so much. Over the past year, it's down 27.75. Now, oil has been creeping up over the last week or so. Oil companies did have a good day, but overall, oil companies have been doing quite poorly. And I had this conveniently kind of loaded up. These are the 11 sectors that represent most stocks, right? They all fit into one of these sectors. And here's energy, where Devon Energy would be in. And it had a good day, but it's had a crummy month. The year is not even close to keeping up with everything else. You can see that technology just really killed it. Communication services did awesome. Consumer discretionary did great. And even over the long haul, over the 5 years, 59% is okay. But man, when you look at technology or consumer discretionary, communication services, even industrials have done far better. So I think that energy could act as almost like a hedge on when everything else seems to go down. Oil prices or oil companies do well. I think Devon's a good company. It's a $21.5 billion market cap company. It is beaten down. So if anything, it's not going to go down much further. It's going to probably, if there was a positive surprise in 2025 around oil, Devon Energy is going to scream up because it's one of the smaller companies, 21 billion, as opposed to, and I'll show you Chevron since I've been a Chevron stockholder for a while. Kind of compare it to Chevron. Chevron's 260 billion in revenue. So Chevron, if there was a positive surprise in the oil complex and energy, Chevron's not going to like take off like as fast as a Devon. Devon is small, and they'll go from 21 billion in market cap to 30 billion in market cap, representing a nice 40% rate of return quickly. That'll happen very nicely. You can see that when you have higher oil prices, this thing will scream up. It got up to $75 per share. Man, that would be a beautiful thing. $32 a share currently. This thing can definitely double over the next couple of years if you have oil prices and conditions that really favor oil companies. So Devon, I think, provides a positive investing opportunity for investors, but you need to know that, hey, you're not buying, a tech stock that's going to scream up just on a lot of investor sentiment. Let's say a Palantir, which has really gone up nicely for investors. That's been a big sentiment stock, right? People just believe in Palantir. Just a lot of exciting things happening in technology. That's not Devon Energy. Now, the positives that are going to help Devon Energy, you have a president that is very friendly to oil. Now, let's take a look at where Devon was. And I'm going to go a little more into history. Here we are at, this was a dip in 2016. So this is when President Trump got into office, which is, I expected it to be better than that. Yeah, during Trump's last presidency, Devon didn't do very well. But then you had, I think, I don't think there was a reason for it. Just oil prices went up. And when we had the current president take office, these guys screamed up, "Oh my gosh, look at that nice rise. Almost 1,000% return on Devon." And look back here. Wow, look at that run. This is high oil prices. When oil prices go up, Devon Energy starts making lots of money, but they can't control that commodity. It's not like they get to say, "Hey, we're going to sell a barrel of oil for $200 a barrel." Nobody would buy it. Nobody would buy it. They'd be out there with a bunch of oil they can't sell. So instead, they have to take the market's price. And right now, it's roughly at around $71 per barrel. And that's a price that they can make money, but not crazy profits. You get that barrel per oil or price per barrel at $120, you're going to see Devon Energy priced at $60 a share in no time because they're going to be making so much money. It'll be a party over at Devon Energy. So there's my comments there. Again, they provide I think a positive proposition to an investor, but investors need to know, how does this fit into my portfolio? Am I expecting this thing to be a nice, consistent, like we looked at CTRE earlier? Let's look at that again. CTRE is kind of a nice, smooth, boring company. It's for the year, it's up 20, call it 21%, and you get paid a 4% dividend. So let's call it 25%. That's great. That's great from a nice, boring REIT, real estate investment trust. This is not going to be Devon. This kind of gradual going up and so forth. Devon's either going to be, you're going to double your money in the next 2 years, or you're going to lose a little bit of money. But for it to just kind of go up gradually would be a surprise to me. And so that's what I think of Devon Energy. And hopefully my comments you found interesting. It's nice to have you, Joshua. Judging from your picture, if that is your picture, you're a younger investor, and it's great to have young investors. I would love for you guys to learn to build wealth, create lots of wealth, and empower yourself, have more money than you need, do stuff that you think is interesting. Take care of the people you love. In my situation, I got this awesome wife and I got 2 sons, and I try to take care of them as well as I can. And having money gives me more ability to take care of them. So I'll leave it at that. All right. So let's see here. We got Rotel and Cheese. How are you doing? Happy New Year. Good to see you on the chat. Real Madrid. Happy New Year. What do I think is CME? I think that's CME Group. NDSN. Neither are high growth stocks, but both are starting positions. All right. See this. I showed up to the right live stream. I got people looking into some good value stocks. Because for all we know, value stocks are going to do well this year. They didn't do great, but we can't invest looking in the rear view mirror, expecting this would happen over the last 2 years. So this is what's going to happen over the next 2 years. No, it doesn't work that way. Let's think about, what stocks are going to thrive, what stocks are going to do well. So we'll look at CME Group, we'll look at NDSN, and see what we're looking at there. But value stocks aren't bad. I'm keeping my value stocks. I was thinking of selling some of, a couple of those positions. And I thought twice. I was like, you know what? For all I know, that's really going to work in 2025. So let me just hang on to them. So what levels would you be picking up LNTH? It's funny you ask, because I started a position on LNTH today. So just look at today's stock price. Look at today's stock action. Now, I dollar cost average into positions. I am not smart enough to tell you when the perfect time is to buy a stock, but I like looking at companies. We can look at LNTH, which is, I think it's I'm going to get the name wrong. So let me look up the name, try to pronounce it right. Lantheus Holdings. So we can look at their fundamentals, and I can share with you why I think their fundamentals just look really, really good, well enough to buy the stock. So we'll put that one on ice. All right. Any thoughts on MNDY, ESTC, double-digit growth? Well, let's take a look. MNDY, I'm not sure what that is. ESTC. Is MNDY that software company called Monday? Maybe. We'll take a look. Thoughts on Intel, one of the worst stocks in the SPY this year. Yeah, Intel, man, it is a dumpster fire. We'll see how things sort out on that. I would say that they do have some very valuable pieces to Intel. So they may want to maybe make the company smaller, sell off some pieces to create some capital, create some cash, and then kind of have a go forward path. But right now they have to hire a new CEO. They got to get their act together. They do have a cash cow in their CPU business because that PC sales are up. So we'll see where things go. But I think Intel is a dumpster fire. It might be worth watching it because if you pick it up at the right time, it may be a good recovery story. So we'll see. Am I familiar with FMX? You know, I may have looked at this stock in the past, but it'd be interesting to look at. When I look at Mexican stocks, for some reason, the ones that have been doing well and seem to have good fundamentals are a little expensive. I'm like, well, I don't want to leave my home country and buy into another country and buy into weaker fundamentals. But let's take a look, and then I'll show you what I'm seeing. For all I know, maybe the fundamentals are a little better now. Probably the last time I looked into Mexican stocks was maybe 3 months ago, maybe a little longer. And I did look at the top companies, that are publicly traded, that are doing business in Mexico. I believe this one was in there. And I am familiar with that store brand. And they're like 7-Elevens or convenience stores down in Mexico. They're everywhere. So we'll take a look. All right. So we looked at Devon. Devon looked like a good company. Now let's talk about CME. So CME Group, together with its subs, operates contract markets for trading of futures and options on the futures contracts worldwide. And I believe they're in Chicago. This is, I think, yeah. So commodities historically have been traded in Chicago. They still are. It's just they're not traded on computers. So the computers might be located in Chicago. They may not. But if you ever want to see like documentaries on how it used to be, looking at how traders would trade for commodities in the Chicago Mercantile Exchange, super interesting. Some people made good money, but it was like super stressful. And those days are behind us because now everything's computerized. And when people are looking to buy a commodity or sell a commodity, the transactions are handled so fast that you have algorithms and software that's kind of taken over. And the market isn't what it used to be. But this company continues to operate. And what they do is they're a market maker. They operate this market. Really good market cap at 83.69 billion. Revenue is 6 billion. PE is 24. Forward PE 22.6. Nice dividend of 4.48%. Over the past year, it's only up 10.2%. 2.27% with that dividend. We'll call it that this stock's done a little over 15% for the year. Not bad. Now, this is bad because if you parked your money in CME for 5 years, you'd be up 16.5%. You receive that dividend every year. So maybe you can call this a 36% rate of return. Well, that's not great. That's not very good at all. But what's going to happen in the future? Are these guys growing, or are they just kind of stagnant? It is good to see that they're really going up. Maybe they have some momentum. Let's take a look at their fundamentals. So the growth is looking good. Trailing 12 months, 13%. Yeah, 13% in the most recent quarter. Growth is looking good. This is a pretty good sized company. You know what? I clicked on the wrong one. Excuse me. The most recent quarter grew at 18.47%. So that's why you're seeing the stock really move up. On September 30th, that quarter went up 18% in revenue. That's very good growth. Man, CME Group. And it's a pretty large organization, up to 6 billion. So growth on 6 billion, that's pretty good. 13% on 6 billion would be well over 600 million. So very good growth. Now, when we look at free cash flow has been expanding nicely. I like data sets that show an upward trend. It shows consistency. It gives me a greater level of confidence that I could predict a good forecast for this company. And this is a good looking free cash flow for the company. Gross margins, they're a data company, so they're not selling anything. So they don't have a product cost. They pretty much probably license their data, and that's what they're selling. So a very profitable company. That's probably why you're seeing such a large multiple on sales. It's a $6 billion company, but they're worth more than $80 billion. Now, do I think they're discounted? Not so much. Let's say, just to use some round numbers, I'm going to use 4 billion of free cash flow. I'm going to round up to 4 billion. Then I would multiply it times 20, which would be probably a good line in the sand that, hey, if this company was priced below 80 billion, so if I go 4 times 20, 80, if they're priced as market cap below 80 billion, they'd probably be discounted. Above, they'd either be fairly priced or priced at a premium. Well, they're at 83 billion. So these guys are not going to look very discounted for me. They'd probably be fairly priced, and I'd probably pass on a stock like this. Analysts, and I bet you a bunch of them cover it, 16 of them cover it, they think it's fairly priced. So this one here is a dividend payer, 4.48, and it's been going up recently. So I actually think this would worry me, that maybe it goes up for a while and then it comes down, because that's what it's done in the past. It goes up, comes down, goes up, comes down. So is it going to be another one of those episodes that it goes up and then it comes down? So I would pass on this. If I was looking for income and I wanted 4.5%, I could easily get that out of a bond or out of a bond ETF. So I would pass on CME Group. I could probably find better value stocks in the financial space. In fact, I got into New Holdings today, which is an international stock, not quite like CME Group. But if I were to say, hey, let's say I'm talking to one of my sons and he's like, yeah, I really want to be in financials and I don't want a super high risky company. What would be some other stocks to consider? Well, I'm in Citigroup. P is 20, forward P, look at that, 10. These guys are really profitable. Analysts believe they're a little bit discounted. They pay a nice dividend. And when we look at their stock, it has been working for the 1 year. You had to know when to buy it. Buying in this range was really smart. For the past year, 37%. Very good. Is it going to keep doing that? Well, we expect that the new administration is going to make life easier for banks. They're going to lower regulation. They're going to try to get interest rates to come down a bit. We'll see if that works. But Citi has had a couple quarters where growth hasn't been overly exciting. They've had really good growth previous to that. And I expect they're going to get back to that growth trend. They're a big bank, and I think they provide really good profitability and overall book value growth for the investor. And that's why I buy into Citigroup. Another financial services option out there is Chubb. So that's, instead of CME Group, which is kind of a financial data company, I don't like what I'm seeing. I don't like the fundamentals. I'm also in Chubb now, and Chubb is also Warren Buffett's in Chubb, which is financial services or financials, insurance. And these PEs are really low. These guys are cranking out cash. Like, it's coming out of their ears when you look at their free cash flow. And this is what Warren Buffett loves, right? Look at this cash flow. These guys, man, beautiful. Nice cash flow growth. So with a company in financials that looks better, Chubb looks fantastic. Do they pay a dividend? They pay a small dividend, but this is one that I'm beginning in a grow position in. I really like Chubb. All right. So NDSN. Nordson Corporation. Engineers, manufactures, markets products and systems to dispense, supply, control adhesives, coatings, polymers, sealants, biomaterials. They're an industrial doing specialty industrial machinery. They've been around since 1935. All right. Good, solid industrial stock. Their stock down 21%. They pay a 1.5% dividend. And over the 5-year, not getting it done. You're in the green, but not well enough. You're falling behind. The whole market's moved much faster than this. We got to find better yield, but maybe this one's going to do better in the future. Let's take a look at their fundamentals. So growth is not overly exciting for the last couple of years. It's a really slow grower. Their growth is going up, but going up from 2% up to 3.5% in the latest quarters. And so this is a slow grower. So this is a nice value stock, slow grower. Doesn't pay very much of a dividend. Now, let's take a look at their margins. Curious to see. 55% margins is good for an industrial stock. That's good. Let's look at their free cash flow. So free cash flow has not been growing. So you can see that it's plateaued from 2020 to 2024. I'm seeing flat. Trailing 12 months, flat. Not good. We're not growing revenues. We're not growing revenue. We're not growing free cash. Not growing. I don't like it. You can look at the markets they serve, and I would, probably want to make sure that, hey, is there a lot of risk there? Are they in a market that's going to get disrupted? And I don't know. I'm not seeing fundamentals that are making me overly excited about this stock. Based on the free cash flow that we're seeing, I'm going to round this up to 500. And I would probably pay 10 times 500, which would be $5 billion for the company. That'd be kind of like the line because they're not growing and they're at 12 billion in market cap. So these guys, in my opinion, are overpriced because they don't produce a lot of free cash flow. So this one would be a pass. I wouldn't invest too much of my time. They're not growing, so they don't create a product that's, customers are just fighting over to buy. You're not getting new customers. They're just not organically growing. And they haven't really done much over the last 5 years. Over the last 1 year, they're down 21%. Just I'm not seeing value there. And we can find industrials that have good value. I mean, if you want a solid industrial, I like 3M. I like the fact that 3M is a very known company. It's done well over the past year, pays a dividend. They had to reduce their dividend because they had some legal troubles in the past. They really were sold off, and they were a good opportunity to be bought. And if you look at the return, if you bought them at the lows, your return is actually better, which is what I tried to do with 3M. I bought my shares at good prices. And I think these guys have really good PE. Forward P is 17. Let's take a look at their growth. So they're beginning to grow, which, let me make sure I understand what we're looking at here. That number looked way too high. I know that they're beginning to grow, but I don't know that it were growing at 22%. I think there's something wrong with the data here. This is a turnaround story, and I think they're doing a good job. I think they cleaned a lot of the problems they had. They generate good free cash, and overall, market's really liking what they're doing. So that's an example of an industrial stock that is beginning to work, and I think has more upside in my portfolio. None of what I share is financial advice. I'm just kind of giving you my opinion on stocks and sharing a couple of stocks that I'm an investor in, but I'm not recommending you buy any of the shares that I talk about, any of the stock symbols. So I think we covered CME and NDSN. It's a pass on both, but let's talk about one that I did buy. And we'll look at Lantheus. So this is a small cap company, 6.2 billion, 1.5 billion in revenue. And just you see that some things are working for this company. Lantheus develops, manufactures, and commercializes diagnostic and therapeutic products that assist clinicians in the diagnosis and treatment of heart cancer and other diseases worldwide. Okay. So they help, I believe, the injectable and the product they sell helps to really show organs in the body when people are doing, or when they're getting MRIs, x-rays, and that kind of thing. So it helps the medical professionals see what's going on in a patient. PE is really reasonable, 14.8. Forward PE is a little lower. Strong buy. Analysts like the stock. They think it's really discounted. It's doing well. It really settled down. It really came down recently. We started to track this in our community, about a month ago. I finally pulled the trigger and thought, this is a good one. I got to start accumulating some shares. Over the 5-year, it's really working. This company has caught the attention of investors. It's had a little bit of volatility. A little bit is kind of putting it lightly. We've had some pretty nice cliff dive in here, but overall, you can't argue with 341. You put in 10 grand 5 years ago, you're sitting on, probably 44, 45 grand. That's nice. The reason for it is revenue growth. Investors love revenue growth, and this one is growing. Most recent quarter growing at 18.37%. I think that's why we had a little bit of cliff dive, because it's not growing as fast as it was, but it's still growing. And we have this is already a free cash flow producing company, and they've grown their cash flow very quickly. Looks really good. And very good profit, 64%. Not as profitable as like a pharmaceutical company, but good profit. In general, I have a valuation on this stock. I think it's discounted, and analysts also believe it's discounted. So I thought it'd be a good stock to begin a position on. And I dollar cost average into companies, especially like this. And it's just really tricky to, pick exactly when this stock is going to be at a low point. And with, zero cost trades, I don't have to be perfect and say, oh, I'm going to buy exactly on December 20th because that's the best price. But I see that it's come down recently, and you know what? It's a good time to buy. So I started a position on Lantheus. I think it's going to do well. And these guys their products are going to be consumed. People need these MRIs. If somebody has to be looked at, by a doctor, by specialist to see if they have a particular illness. They're going to pay for this. And their insurance is going to pay for it because this is a known procedure that can help a person get well diagnosed, potentially avoid even more more aggressive complications. If they catch things early, the patient does better, they recover faster, they go back to normal quicker. If they don't, it gets worse. For the insurance company, they want things to be solved quickly because it's the least expensive path. If somebody gets really ill and they have bad illness, then insurance companies pay a lot. So they're going to be supportive of Lantheus being a part of the medical ecosystem, and they're going to be happy to reimburse for these types of products. So that's Lantheus. It's a good stock. ABEV. All right. So I think let me jump over to FMX next. I think that one I've looked at this one before. Fomento Económico Mexicano. Let me get reacquainted with these guys. So Fomento Económico Mexicano, through its subsidiaries, operates as a bottler of Coca-Cola. The company produces, markets, distributes Coca-Cola in Mexico, Guatemala, Nicaragua, Costa Rica, Panama, Colombia, Venezuela, Brazil, Argentina, Uruguay. Okay. Yeah, so then they also have this retailer. Man, almost 400,000 employees. It's a lot of employees. So most definitely, like a Coca-Cola is a franchise that, people drink Coca-Cola down in, speaking of, I know Mexico because I've traveled there a few times, and I noticed that they do drink a lot of Coca-Cola. And it sounds like other countries do the same. Market cap's 28.65 billion. Revenue is above that. PE ratio 24.3. Forward PE of 16. It's a buy according to analysts, but let's take a look. So all this is in US dollars. Let's see. This is going to be in Mexican pesos. So I'm going to show growth rates and stuff, and then I'm going to kind of depend on this website. They'll do the conversions for me, but let's take a look at revenue. Revenue growth 13.5. That looks good. Good growth. And this is the trailing 12 months. The full year for 2023 was 17% growth, 18% growth. Wow, those are really good growth rates. So that looks good. Now, to look at free cash flow, one of the things I like about this website is they give me the free cash flow in US dollars. So I don't have to do the conversion from Mexican pesos and all that stuff. So we're at $582 million of free cash flow. Okay. Now, what I do want to see is how have they been growing their free cash flow? And we're going to see it in pesos, but I'll use the 582 as kind of a metric to do a quick math calculation on. So free cash flow, you can see this pesos. We've seen a drop. So from 2021, 2022, so it's really dropped. Huh. Wonder what happened there. Yeah, you see that it's really dropped recently. Is the commodity prices have gone up on them, like the ingredients of making these beverages. This is an area of concern. Why has revenue dropped so much from 2021, 22 down to 2023? It looks like the trailing 12 months is closer to this 2023 number. So that's a concern. That free cash flow has dropped so much. So gross margins, they've held at 40%. Okay. Now let's take a look at cash flow. What's the big difference? So we have net income, depreciation has gone up. Okay. And then it looks like they had a big gain on a sale of an investment, and you have to undo it from your cash flow because it doesn't count. It's just it's a non-cash event to recognize that gain. And this is probably the gain that we're talking about here. Okay. So operating cash flow. So CapEx has really gone up. That's why cash flow is really low. Is capital expense has really gone up. It really went up from 17.5 and now they're spending 42. It's more than doubled. So the big question would be, is this a permanent capital expense trend, or is this kind of a one-time? It's, they had to really modernize their factories and now they're good to go for the next 10 years. That's a big question that I think an investor would need to listen to the earnings calls to get their heads around, because if they return to a better cash flow, then they'd get a better valuation. At 582 million of trailing 12 months free cash flow, maybe these guys are worth like 10 billion to me, and that's way below the $28.6 billion number. Now, we saw the cash flow is much higher. Well, if we see that the CapEx is really coming down, and maybe if we look at the quarterly, it might show us how it's trending. Yeah, the CapEx is staying high to the most recent quarter. So this is what's changed the valuation. And for me, I think this stock is priced too high. Until this number comes back down to like, I guess 6 million or 6 billion pesos, this stock's priced too high. I take it through my valuation. I wouldn't be able to get it priced up to the current stock price level. Analysts focus primarily on earnings per share. And CapEx is capital expense. It gets capitalized, meaning it doesn't come over to the income statement, which is where earnings per share lives. It gets capitalized and then depreciated over multiple years in the future. It could be 10 years, because if it's a factory, it's going to be, in operations for a long time. They can depreciate it over a long time. And that's why, like, Charlie Munger did not like earnings per share. He's like, hey, management can really play around with that earnings per share number, and he don't like that. So these guys, the earnings per share, and I believe this is in Mexican pesos still. It's going to be 10.41 Mexican pesos. And what is the conversion? So it's about 0.05. So 0.05 would be 50 cents. This would be about 50 cents a share in US dollars. Yeah, so this one would be a pass for me. And I did look at it like 3 months ago, and it didn't go anywhere. It didn't even make it to my watch list. I was like, yeah, pass. This one's not valued well enough. The stock that looked interesting but is kind of risky is Celsius in this space. If you like beverage, right? If you like Mexico, I don't have a lot of suggestions there. But Celsius is kind of a stock that was growing really fast. Probably spelling it wrong. So Celsius, there it is. And these guys, they were on a rocket ship ride, and then it's really come down. So the question is, well, is this like permanently going to be an undesirable, or is it that pullback an opportunity? Well, the story that I heard was that Monster took away a good part of their market by having this big contract with one of the main distributors, bottlers that they were doing business with. And you can see where the growth really did slow down. If we look at the quarterly, it's really slowing down. So we're seeing kind of a really big change in Celsius. Man, that's a big drop. I haven't seen it in a while, but that is concerning. That's why investors are getting out of this stock. So I don't really have a beverage recommendation. I don't play in beverage. It's not a space that I think is all that great for me. And I don't invest a whole lot in Mexico. I have an ETF with just a couple bucks in it. So I don't invest a whole lot in Mexico. So that's FMX. All right. So let me catch up on some comments. So Shadow Guy. Yeah. Cool. So CB, I think CB is really solid. And one of the things that I like about CB is that it didn't run up as much as like Progressive or Allstate. And to me, that just means that it's probably going to have better upside since it's not priced all that expensively, but the fundamentals are just phenomenal. So I am good with it. Mike, thanks for joining. And I'll catch you on the next live stream or on the investor call. Again, Happy New Year. So Fannie Mae, I've looked at that in the past, and it's just not my investment. It's kind of like big bureaucracy, and I don't see how you can make a whole lot of money there. I think you can probably make a little bit of money. So Mindy has pulled back. Fantastic growth ahead. So MDNY. Yeah, Monday. So these guys are a software company. Software applications in the US, Europe. Okay. Cloud-based. Okay. All right. And these guys are 1,854 employees. I wonder where they're located. Israel. Cool. All right. 11.74 billion in market cap. They've worked nicely for a year. And you know what? Especially this upward chart looks good to me. They were overpriced here and they came back down to earth. Okay. $906 million of revenue. PE is really high, but coming down next year. Analysts think it's discounted. Let's take a look. So nice growth. They're growing. They're small. 906 million. It's in US dollars. They have really good profit. This is why I like the software business. Is gross margins 89%. What a nice number. Their free cash flow looks really good, 280. You can see that once they got scale, they really are cranking out free cash flow. This one's a little hard to forecast. This could be worth their market cap. It's just a little early to kind of begin to go crazy about this stock. I mean, 33.9% is good growth. Give them that much. And it's not slowing down a whole lot. It's looking good, but they're a really small company. It's easy to grow at these rates when you're small. Yeah, this one is fairly priced. You could say it's a little bit discounted. I couldn't argue with that. It's just not incredibly discounted. And it's kind of an unknown commodity. It's a small software company. They are doing really well. Their fundamentals are good. They're just they're going to have plenty of competition. You know, they're going to have to compete against um Intuit because Intuit has QuickBooks. They're going to compete. They have good competitors. These guys are doing well. They're expanding really well. So if they can keep expanding and grow that free cash flow so that I could forecast it to be higher, then I could see potentially being serious about this company. But my concerns are not, you know, are not all that crazy. You see that the stock was priced up here and it fell back down about 33%. So there's a little bit of disbelief in the company. It brought down the price, and I would say that I just need probably another couple quarters, if not a year, of data before I could really forecast their cash flow. And for all I know, you get down the road a year, and then you're like, "Whoa, they stopped growing. They're only growing at like 5%, and then their valuation is going to collapse. They'd go from 11.7 billion in market cap to like 2." Because if you're not growing, you're small, it's not going to be a pretty picture. Yeah, that could be definitely be the case that they're investing in Oxo's growth. But that's a lot of capital, man. And uh their top line number was growing, but not crazy growth. I just think there's just too much there's not enough free cash flow for me. You know, if it's the right investment for you and you do great with it, congratulations. All right, so I'm going to put the other symbols on hold for a little bit. All right, so I wanted to go over a couple stocks that I was interested in, and if there's any more suggestions, keep them coming. If there's anybody that's a paid member, put any request in there, and I'll jump on it. While I'm at it, if you want to be a paid member, you can join our community. $10 a month, $25 a month, $100 a month. Different levels of perks and benefits. I'd really appreciate it if you could join. I will look for your name as you go on these live streams, and then you'll be invited to member only calls on weekends, and would appreciate you considering being a paid member. And you can tune in to our Discord and have more constant contact with the community. Here's our Discord server. Just be careful, as you probably know, as Discord's full of scammers. So be very, very careful. A lot of people impersonating me on Discord. I will never send you a friend invite. I will never try to convince you of any kind of investment. I never give financial advice. All right. So I wanted to look at Coinbase. Coinbase was down quite a bit today. 2.84. It's doing well for the year. At certain points, especially once Trump won office, boy, this thing took off. It's been a good stock. I bought around here. I didn't buy when they IPO'd, so I'm doing well with the stock. Now, I want to take a look at what stories are out there for the company. This guy's your CEO, and there's a rumor that he may join Trump's cabinet and be the crypto czar. I don't know if that's true or not, but that's one of the rumors that I heard out there. So nothing out there that's all that concerning. These guys are $5 billion in revenue. I really like their cash flow. They make a lot of money, very, very profitable, and they're a growth company. So yeah, I wanted to just check in on their stories. Looks like everything's good with Coinbase, and I am good to go there. Does anybody on the live stream own Coinbase? Any comments on Coinbase that you guys have? Be curious to see how many people out there are in Coinbase, if any. All right. So another stock that went down was Robinhood. And I think for the last couple of days, trading days, you've seen stock prices come down. This one here is doing great for the year. It's kind of gone sideways a little bit, but the last month is where you've seen stock prices really go down. And it's because, stock prices are really high. P ratio 63, forward P 37. It's fairly priced according to analysts. And this company just keeps, expanding and making new products and so forth. So I really like them. So that is Robinhood. What kind of stories do we have out there? So AI and crypto drove gains. Okay, knew that. All right, everything's good with Robinhood. Yeah, I like Robinhood. It looks like the president's going to have the inauguration, and a lot of these companies, are donating money so that I guess he can have a bunch of balls and so forth. So that way they can get access to be to have access to power. All right, so why not? So why not buy Bitcoin than Coinbase? Those are two different animals. So obviously, like Bitcoin, I own Bitcoin, and Bitcoin is a store of value, and it's doing well. But Coinbase is an exchange. They make money when people buy or sell. So they're in the same ecosystem, but two different companies or two different investing classes, asset classes. Bitcoin is a store of value, where Coinbase is a company, and they are an exchange. So gladly own both. And you like Robinhood? You like their UI? Cool. All right. So Robinhood was out there. I wanted to check in on Robinhood. DocuSign was down. Google was down. Zoom was down. Again, these stocks have been kind of coming down, but what's is somewhat comfortable is the market's down. It's like, the market for the last couple of weeks, it's down 4.28%. So, okay, it's not one stock that's in trouble. So, I think a good set of my stocks went down today. I bought into them, dollar cost average into them, and I think everything's going to be fine. All right, so that looks good. So tomorrow there's no trading. Tomorrow we have the day off, and then we'll come back on Thursday, and then trading for the first trading day of 2025. We'll get going. Looking forward to it. And I'll do all my accounting tomorrow for the year, and then start fresh day one on Thursday. Looking forward to it. All right, so I am going to call it a session. Again, consider being a paid member. I'd appreciate that. And join us on Discord. If you'd like to join us on Discord, got a good server going. All right, everybody. Thanks for joining. Happy New Year. And again, we wish you good health, fun experiences, and great returns in 2025. Thank you. We'll see you on the next live stream. Take care.